Thank you. Good afternoon. Assalamualaikum warahmatullahi wabarakatuh.
Okay. Good morning, ladies and gentlemen. We can continue our session into session 2. So therefore, the rules is still the same. The participants will explain or present their papers within maximum of 10 minutes, 10 minutes times. And in the end of the sessions, we will open the discussion sessions. So in this session, the first one, papers by Bapak Muhammad Franz Romi and friends and teams. And the second one is Ibu Eka Yulianti. And the third one is Ibu Jeniari Sheila Damanik, Verika Wita, M. Sembiring. And the last one is Bapak Ivan Wicaksana Siregar. Okay. Okay, all the presents are already in front, so we can start the first sessions by Bapak Muhammad Franz Romi with the paper titled Model of Improving Organizational Citizenship Behavior Lecturer based on Organizational Commitment, Organizational Culture, and Job Satisfaction in Private Universities in Bandung. The time and floor we would like to present to you.
Okay, thank you so much for moderator. I beg my pardon. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Okay, thank you so much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Rabbi Sadri wa Yasrim Amri bil Huruk Data Milisani Yafkau Koli. Thank you for all. Thank you for head LPPM University of Jenderal Ahmad Yani. Introduce myself. My name is Muhammad Franz Romi. Spell it apa? You can call me Romi. In opportunity, I will to be present my paper model about with title about model of improving organizational citizenship behavior lecture based on organizational commitment, organizational culture, and job satisfaction in private university in Bandung. For the first introduction, lecture are an asset on an educational institution to develop program to education the life of the nation that during the COVID-19 pandemic. Okay, must be able to adapt to technological development to support and the implementation to Tridharma University. Tridharma University about research, education and teaching and community service. And then second, organizational citizenship behavior on by lecture, especially those who work at private university in Bandung, tends to still need to be improved, one of which is influenced by strong organizational culture of the institution in which the lecture work. My literature review I have four variable in this my paper. The first organizational lecture. Organizational lecture is organizational lecture is a way, a principle, a tradition of carrying of work that must be adhered to jointly by members of the organizational in effort to influence the way members of the organizational behave. And the second, job satisfaction. Job satisfaction is the second variable. Job satisfaction is closely related to the attitude a person who is sound to this or he work. Employees will have high job satisfaction will show a positive attitude toward what the employee provide for his her organs. And the third, organizational commitment. Organizational commitment is a situation in which an employee identifies himself or herself with certain organization with the purpose and desire to maintain his or her membership while in the organization. And the last my variable, organizational citizenship behavior. Organizational citizenship behavior is an action that does not include the formal work requirement of an employee and is not related to remuneration but can increase effectiveness in the function of the organization. In this, this is a conceptual framework in my paper. I have four variables. The first is organizational culture, and second, job satisfaction, and third, organizational commitment, and the last, organizational citizenship behavior. I have 5 hypotheses, and then methodology. Population ensemble. In this study, the population was lectured at a private university in Bandung, and the sample taken by 50 lecture from 21 private university in Bandung using our random sampling techniques. Okay, and then data analysis research and engineering instrument, yaitu questionnaire in data collection in this study, which has been distributed to lecture at 21 private university in Bandung to be further analyzed with data analysis technique used in this, namely using structural equation model or SAM with engineering instrument AMOS. Descriptive test from the result of the analysis of 4 research variables, including organization culture, job satisfaction, organization commitment, and then organization citizenship behavior, can be conclude that the organizational culture variable and job satisfaction lecture at a private university in Bandung are include the category of null. With while other variable, namely organizational commitment, variable, and organizational citizenship behavior fall into the high category. Okay. The next hypothesis 1 is accepted, and then hypothesis 2 is accepted. Hypothesis 3 is accepted. Estimate standard regression y coefficient between the organizational culture variable to the organizational commitment to the result 0.481. And then hypothesis 5 is accepted. Hypothesis 6 is accepted. And then conclusion, the results show there was a positive influence of organizational culture on job satisfaction. Job satisfaction had a positive effect on organizational citizenship behavior. Organizational culture had a positive effect on organizational commitment. The organizational commitment to organizational citizenship behavior, and then job satisfaction had a positive effect on the organizational commitment. It can be suggested that increase to commitment commitment of organization, organizational culture, job satisfaction, and then will have impact on improving the organizational citizens behavior of lecture or private university in Bandung. Okay, finish. Thank you everyone. I beg my pardon. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.
Okay. Okay, thank you, Bapak Romi. Your paper is very interesting about want to find the model of job certification of lecturers in private, in 21 private universities in Bandung. Okay, thank you. And the next presentation will be held by Ibu Eka Yulianti dan Bapak Ivan Wicaksana Siregar on the title of Analysis on Indonesian Capital Market Reactions to the COVID-19. Okay, for the time and floors, we would like to present to you. Yes, please.
Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, first of all, let's thank to Allah Subhanahu wa Ta'ala who has given us the mercies and the blessing and all things we need, while we could be together in this place with happiness and in healthy. Well, ladies and gentlemen, okay, I'm so sorry. Well, it is being great honor for me to be standing here at the International Conference on Environmental and Technology of Law, Business and Education on Post-COVID-19 2020. And in this opportunity, I would like to present about my research, with the title is Analysis of Indonesian Capital Market Reaction to the COVID-19. And this research conducted by me, Eka Yulianti, and my partner, Ipan Wicaksana Siregar. And we are from Faculty of Economics and Business, Jenderal Ahmad Yani University. Well, ladies and gentlemen, before I begin my presentation, this is the content that I will be present today. The first is about introduction, literature review, research methods, results and discussion, and the last is conclusion and suggestion. Well, this is the first content is about introduction. We know that the COVID-19 disaster is one of the phenomenal events that have occurred in 2020. And not only in Indonesia, the COVID-19 also occurred in various countries around the world. And we know COVID-19 was detected for the first time in early December 2019 and appeared in an animal and seafood market in Wuhan City, China. And then this pandemic has had a huge impact on economic activity, although the exact extent of the impact is yet unknown. And by the end of March 2020, more than 100 countries around the world have implemented lockdown policies. And on 2 of March 2020, for the first time, the government announced 2 cases of positive COVID-19 patients who infected Indonesian citizens. And the next slide still about introduction. We can see that on 8th of March 2020, there were 8 positive people, COVID-19, and then on 9th of March 2020, there were 19 people positive COVID-19. This high case spike for the first time had a negative impact on the capital market, where on 9th of March 2020, the Jakarta Composite Index closed down 6.5% to 5,136 levels. And on 10th of March 2020, the Indonesia Stock Exchange announced the implementation of the trading stop or trading halt policy. And this is indicate that information relevant to the capital market. The next slide, still about introduction. Start from the investment in the stock market. Of course, the investors need to consider risk and return on investment. And one of the things that consider to investor is information relevant to the capital market, and in this case is about COVID-19. And we can see that this is the LQ45 index in Indonesia. This value decline of LQ45 around the event period was thought to have been caused by the COVID-19. And to ascertain with this reaction is an effect of COVID-19 or is it significant or not, it is necessary to have more depth analysis of these events related to testing the efficient market hypothesis. And the method that we can use in efficient market hypothesis is an event study. Well, the next is about literature review. The first is about market efficiency. Market efficiency shows a condition where the price of securities quickly and fully reflects all relevant information available. And the FAMA classifies 3 kinds of form of market efficiency. There are, the first one is about weak form efficiency, second semi-strong form, and the last is strong form. And the semi-strong form we call event study. If we talk about event study, the event study describes a technique of empirical financial research that enables an observer to assess the impact of particular event on a firm's stock price. This is by Badi et al. 2008. This is the empirical studies. The previous research related to the event studies was conducted by Sansa, Alam et al., He et al., Ashraf, Liu et al., Katanfit, and Hayden 2020. And the last in Indonesia was conducted by Nurmasari 2020. The next slide is about research method. This method used in this research is descriptive analysis method. The method used to analyze abnormal return is the event study method. And if you talk about population, the population in this research is all stocks included in the LQ45 index on the Indonesia Stock Exchange. And then the sample of this research, the sampling technique is a saturation sample because the entire population is used as the sample. And the next slide is about results and discussion. This table is a table of results of average abnormal return. We can see that the announcement of COVID-19 patients that occurred on 9th of March 2020, there were 2 positive average abnormal returns and 9 negative average abnormal return, and most of them were significant. The existence of average abnormal return is positive 5 days before and 4 days before, and it is significant that the market has not responded to the COVID-19 because before the event that COVID-19 patients in Indonesia were still confirmed to be under 5 cases, except for 1 day before, which had 6 cases. And the 3 days before to 5 days after, positive patient increased, so that caused average abnormal return to be negative and almost entirely significant, except at 3 days after. And these results relevant to the study of Nurmasari 2020, Sansa, Alam et al., He et al., Ashraf, Liu et al., Katanfit, and Hayden, and all is 2020. Well, the next slide is about conclusion. Based on the results and discussion previously described, it can be concluded that during the COVID-19 pandemic, the market was said to be efficient in half a strong form, both in information and decision. Information efficiency means that the market responds quickly, and efficiency in a decision meaning that the market responds appropriately because negative news is responded negatively by the market. And a negative and significant average abnormal return also reflects that the COVID-19 pandemic has had a negative impact on the Indonesian capital market. And the last content is about suggestion, the suggestion for investor and for the researchers. The first one is for investor. Investors should reconsider their investment strategies in a pandemic situation, such as the COVID-19 pandemic. And also for investors, the decline in the stock market provides many opportunities for investors to start building portfolio. Still for investor, buying, if done properly with sufficient knowledge, will have the opportunity to provide benefits. And still for the investor, there are many other options for investing in addition to capital market instruments such as stocks, bonds, and mutual funds. And don't forget, investors need to allocate more emergency funds to stay awake at a certain time. And the last for the researcher, researchers should increase the observation period to see the extent of the effect given from news related to health problems, and also should be able to use a compounding effect. Well, ladies and gentlemen, I think that's all my presentation about my research. Thank you for attention. Sorry if I make mistake. Back to the moderator. Thank you.
Okay, thank you, Ibu Eka Yulianti. Your paper is very interesting. You are talking about the capital market reactions and how this COVID-19 solves the affecting market efficiency. Okay, and we can continue on the third presenters. The third one is Ibu Jeniari Sheila Damanik Ferikawati M. Sembiring. The floor is yours with the titles of the effect of return on assets, current ratio, debt to equity ratio, and underwriters' reputations on underpricing during initial public offering IPO on the Indonesian Stock Exchange in period 2014 to 2018. Okay, we would like to present to you.
Good morning, ladies and gentlemen. A honor to meet you in this beautiful day. First of all, let me introduce myself. My name is Jeniari Sheila Damanik from Jenderal Ahmad Yani University. So today I will present about the effect of return on asset, current ratio, debt to equity ratio, and underwater reputation on underpricing during initial public offering or IPO on the Indonesian Stock Exchange in period 2014 until 2018. First is introductions. Along with developing the economy in Indonesia, a company needs to develop and maintain its existence. In developing business and financing the company's operational activities, a company's capital availability is what a company needs. There are two ways to get this capital, namely by utilizing existing sources within the company itself or by looking for other sources of capital that are outside the companies. Companies can use retained earnings as an additional source of funding from within the company. However, in developing a company, sometimes this source of funding is not sufficient. Therefore, the company needs to seek the availability of additional sources of fund from outside the company. External sources of funding can be in the form of selling stock owned by the company and selling to investors in the capital market. However, before a company becomes a publicly listed company, the first thing the company needs to do is conduct an initial public offering or IPO. IPO itself is an activity carried out in the primary market to sell stock for the first time in the public and then be traded on the secondary market. It takes so much consideration in determining the price of stock to be sold. This is because many cases occur in the failure of this IPO, which can harm the company, the issuer, and its underwriters. So lack of information regarding the relevant prices and company stock that have never been traded, cause stock in the primary market to be lower than when traded in the secondary market, or is often referred to as the underpricing phenomenon. Here is the table about companies participating in the initial public offering or IPO for the 2014 until 2018. In the study, 2014 was chosen as the initial year due to the decreased companies conducting IPOs than the previous year. Next slide is about literature review. Here is investment from Tandil Lilin 2010 for capital market and stock from Fahmi 2015. And initial public offering from Jogyanto 2017, underpricing from Purwanto 2014, return on asset and current ratio and debt to equity ratio from Kashmir from 2016, underweight reputations is from Fahmi 2015. And here's the framework. The framework is explain the relationship between the independent variables, the return on asset, current ratio, debt to equity ratio, and underweight reputations, to the dependent variables that underpricing, either partially or simultaneously. Next is about, I will talk about research method. Research in the study, the author used quantitative research for this method. And for the object in the study is return on asset, current ratio, debt to equity ratio, and the underweight reputations in the companies that initial public offering and underpriced in the 2014 until 2018. For population in the studies, as many 136 companies, and determination of the sample is using purposive sampling method. So the researchers get 85 companies as a sample. And for the research data used in the study is secondary data. Next is data collection in this study. Data collection techniques were carried out using documentation and literature study methods. Next is the result and discussion. Here is the table about assumption classic test. For normality, the result is less than 0.05. So the result, the data is in this study were not normally distributed. But China's Spiegel state that data that is more than 30 is said to be a large sample. So it can be assumed to be a normally distributed. For multicollinearity, all independent variable have VIF less than 10, so there is no multicollinearity in this study. For heteroscedasticity, this result is more significant than 0.05, so there is no heteroscedasticity in the study. For autocorrelations, the result is more significant than 0.05, so there is no autocorrelation in the study. And this is a table about multiple linear regressions. Based on this the result, it shows that return on asset and underweight reputation has a significant effect on underpricing. Meanwhile, current ratio and debt to equity ratio does not affect underpricing. For current ratio, there is no effect underpricing because some investors do not pay attention to the current ratio. For debt to equity ratio, there is no effect on underpricing because investors tend to avoid stocks that have high debt equity to equity ratio. For in simultaneously, the return on asset, current ratio, debt to equity ratio, and underweight reputations have an effect on underpricing of companies conducting initial public offering or IPO on Indonesian Stock Exchange for the period 2014 until 2018. And here, conclusion, based on the result of research on the factor that influence underpricings, The researchers got the following conclusions. The conclusion is return on asset and underwater reputation negatively affect underpricing. Meanwhile, current ratio and debt to equity ratio doesn't affect underpricing. For return on asset, current ratio, debt to equity ratio, and underwater reputation have a common effect on the underpricing. Last is suggestions. Research have suggestions that can be considered for companies that will conduct IPO in the future. It is advisable to consider a factor that will affect underpricing, such as return on asset and underwater reputations. For the potential investor who will invest in companies that do IPO, the result in the study can be used as consideration of choosing IPO stock that are feasible to buy. And last, for the future researchers who will examine the IPO, it is advisable to add financial and non-financial variables that may influence underpricing, such as return on equity, debt to asset ratio, inflation, or auditor reputations. So I think that's all for my presentation. Thank you for attention. Good morning and God bless you.
Okay, thank you, Ibu Janiari Damanik. Your presentation is very interesting. Last but not least, we call Bapak Ivan Wicaksana and Ibu Eka Yulianti to present in the last session 2. Okay, their teams will present with the title Predicting Financial Distress of Manufacturing Sectors in Indonesia Using Logistic Regressions. Okay, Ibu Eka Yulianti will present the title with the Predicting Financial Distress with both Bapak Ivan from Faculty of Economics and Business, Jenderal Ahmad Yani University, Indonesia. Okay, are you ready, Ibu?
Yes,
Okay.
I'm ready.
Thank you.
Thank you for the opportunity.
Okay, the floor is yours.
Ladies and gentlemen, thank you for this opportunity to present about my research with the title is Predicting Financial Distress of Manufacturing Sectors in Indonesia Using Logistic Regression. This research conducted by me, Eka Yulianti, and my partner, Ivan Wicaksana Siregar. This is the content that will be presented today about this research. The first is introduction, literature review, research methods, result and discussion, and about conclusion and suggestion. The first is about introduction. The Central Statistic Agency note the growth of large and medium-sized manufacturing industries was experiencing a slowdown in the second quarter of 2019 compared to the condition in the last 2 years. This is because the performance has dropped dramatically. And then financial distress model. By observing the condition of slowdown in growth, there are even some of them that have decreased and no growth has occurred. Manufacturing companies can make decisions and take action to survive due to a crisis that could threaten. And companies, especially those have encountered the financial distress, should be able to conduct a predictive modeling and early treatment before going into bankruptcy. This analysis can also be considered for related parties such as investors, regulators, auditors, competing companies, and the wider community. And almost all studies regarding financial difficulties, financial ratio play a dominant role in almost all the variables used as a predictor. And this proves the fact that the ratio makes a big contribution to understanding the company's financial performance and the future financial status. And many studies have been carried out on the topic of financial distress, both in terms of data collection techniques, analysis techniques, and so on, with the objective is finding optimal solution for the estimate performance firm. And the next slide is about literature review. Financial problems will most likely occur if the company experiences profitability and leverage problems. And if these conditions are not paid attention to and are immediately unresolved, and it can result in bankruptcy. And then financial distress is a condition that needs immediate attention from the company so that the company can continue surviving the company. And still at literature review, companies that experience financial distress can be seen or determined by various factors. And this study is different from the previous studies by using negative return earning as a determining factor for financial distress. The next slide is about research method. The method that used in this research is the method used to analyze financial distress is logistic regression. And the population in this research are manufacturing companies listed in the Indonesia Stock Exchange from 2014 to 2019. And the sampling technique is a for passive sampling technique. And this is the results and discussion. The first one is about goodness of fit test. We can see that with the decrease in the two log likelihood value, this is indicate the model used is a good regression model and it is feasible to use. And related to the coefficient of determination, the Nagel-Kirk R-square value is 0.438 and indicating that 43.8% of the dependent variable, that is financial distress and non-distress, can be predicted by the independent variable in the form of financial ratios, ROA and DTC. And related to the hypothesis testing, the profitability ratio has a significant negative effect in predicting financial distress. And the last, related to the hypothesis testing, the leverage ratio has a significant effect in predicting financial distress. The last content is about conclusion. It can be concluded that the profitability ratio as measured by return on asset has a negative and significant influence in predicting financial distress. And the leverage ratio measured by debt to total asset has a positive and significant effect in predicting financial distress. And the suggestion of this research is companies that experience distress generally have a high DTA ratio, show a total and almost large debt as their to total asset, and some companies even have total debt. Okay, still in suggestion. This is the several suggestions for investors and then management, etc. The first is by paying attention to the profitability and leverage ratios proven empirically in this study, these financial ratios are able to influence financial distress. And suggestion for management to be used as a basis for taking corrective action in which there are indications that the company is experiencing financial distress. And for investor, it can be used as basis for having strategy plan in the stock market. And then for further research, it is better to use certain measures to project the financial distress of a corporation or to use more than one proxy to assess financial distress, such as the use of interest or leverage ratio, coverage ratio, negative book value of equity and cash flow, or to use macroeconomic factors which can be used to predict corporate financial distress. Well, ladies and gentlemen, I think that's all my presentation about financial distress. Thank you. Back to the moderator.
Well, okay, thank you for your presentation, Ibu Eka Yulianti and Bapak Ivan Wicaksana Siregar. The presentations to cover how to predict financial distress of manufacturing sectors using logistic regressions. Okay, by the end of the session 2, we would like now to open the discussion sessions, and we would like to present first from the audience. If there are any question, please raise your hand and state your question, please, into our presenting, the presenter in front. Okay, thank you. Okay, thank you. Please state your name and question very clearly. Okay, thank you.
Thank you for the time for Mr. Moderator. I want to ask something for Ms. Eka Yulianti. The question is, what is the difference between efficient market and inefficient market of semi-strong form? Thank you.
Okay, thank you, Mr. Frido. Is the question is clear, Ms. Eka?
Yes, the difference between
Okay.
market efficient and efficient.
Okay, good. Now for the next question, is there still any question into our presenter? If it's no questions, each presenter can be questioned at each other. Okay, thank you.
Just one question, I think. Just one question.
One question, okay.
It's okay.
Please, can you please answer the question from Bapak Frido?
Thank you, Mr. Frido, for the question. The question is about difference. What is the difference between market efficient and inefficiency? Well, if we talk about the market efficiency, market efficiency shows that the price of the securities quickly and fully reflect all information relevant in the capital market. And inefficient market is not quickly and fully reflect all information relevant available in the capital market. I think that's all. It is clear? Clear? Wow, yeah.
Okay, Bapak Frido, is there any response? No.
Yes,
Okay.
okay. Clear. Thank you, Mr. Frido.
Okay, thank you, Ibu Eka. Is there any question, please? Can you can raise your hand? Okay, if it's enough, we can close the session 2, and we would like to thank you for the presenter in front, and good luck for your next journeys. Okay, thank you.
Langsung pindah, guys. Well, ladies and gentlemen, this is fourth session of our panel discussion and will be led by me as a moderator. For the first presentation will be delivered by Mr. Franz Rami. So, this is Mr. Franz Rami. This is your times. You have 10 minutes to present your paper, please. I'm so sorry. This fourth session for discussion, for panel discussion will be presented by Mr. Muhammad Pransrami, Ferbi Wijaya Kusuma, Dwi Indah Lestari, Rizka Melisa, and Mr. Union. So please welcome Muhammad Pransrami, Ferbi Wijaya Kusumawati, and then Mrs. Dwi Indah Lestari, Rizka Melisa, and Mr. Union. Please come forward. Thank you. Once more, for this session, there are 5 papers will be presented by Mr. Muhammad Pransrami, Ferbi Wijaya Kusuma, Dwi Indah Lestari, Rizka Melisa, and the last is Mr. Yun. Okay, well, for the first presentation will be delivered by Mr. Prans. Yes, with the title is Improving Ethical Behavior Through Emotional Intelligence, Spiritual Intelligence, and Organizational Ethical Culture. Time is yours. Thank you.
Okay, thank you so much for moderator. Assalamualaikum warahmatullahi wabarakatuh. Rabbi shrah sadri wa yassir amri wahlul 'uqdatam min lisani yafqahu qawli. Thank you for all, and then thank you for head of LPPM University Jenderal Ahmad Yani, and then lecture. Okay, introduce myself. My name is Romi. I'm a lecturer in Universitas Jenderal Ahmad Yani Cimahi. In this opportunity, I will be present about my paper. The title is Improving Ethical Behavior Through Emotional Intelligence, Spiritual Intelligence, and then Organizational Ethical Culture. Okay. For the first, in supporting this objective, the educational institution must have a development in the ethical behavior of its student, as well as the ethical culture that the organizational has. And then one of the supportive factor for improving ethical behavior is the intelligence of the student themselves, such intelligence, among other emotional and spiritual intelligence, that is the basic of behavior development at the individual levels. Okay, for the second introduction, it is the problem related to the ethical behavior and the ethical culture of organizational that occurs today is the decline of the ethic, values, and work culture in the educational environment. Ethical culture is closely related to the combined ethical value and the leaders in an organization. And then I have 4 variables. The first variable, ethical behavior. Ethical behavior is often associated with a person, behavior, or attitude through the determination of right or wrong in a conduct, and also with regards to moral principle in this or his life. This is our first variable in this paper. And second, literary review, yet emotional intelligence. Emotional intelligence speak about its individually ability to manage individual emotion, but themselves and recognize other people emotion. Emotional intelligence is associated with how one person motivates and understand the feeling of other individual. And then for third, my variable is spiritual intelligence. Spiritual intelligence is one intelligence in confronting and problem solving of meaning and value by placing human behavior and live in the context of broad meaning. This intelligence makes a person less in an individual closely related to inner consciousness, is measuring the value in one life. Okay, and last, my variable in literature review is ethical culture. Ethical culture speak about of organizational is a standard that combine external and internal adapting in organization. And then I have a conceptual framework. In this, I have 4 variables and 3 hypotheses. And then my variable is emotional intelligence, first, and second, spiritual intelligence, and third, ethical organizational culture, and then the last, ethical behavior. For the next method, population sampling in this study where the population is undergraduate student of management study program at private university, Terghout Bandung, and the sample take in 382 students from 21 university in Bandung using a random sampling technique. And the data analysis research and data analysis technique, I have the question. And the data collection in the study has been distributed to students at 21 private university in Bandung to be further analyzed by data analysis technique used in this study, namely is using multiple regression tests. Okay, and then descriptive test result. Then from the results of the analysis of the 4 research variable, the first emotional intelligence, spiritual intelligence, ethical organizational culture, and ethical behavior, it can be concluded that the variables of emotional intelligence and spiritual intelligence will other variable, namely ethical organizational learning, are in the low category. And ethical behavior is in the substitution category. Okay, for hypothesis testing is hypothesis testing is accepted. The result of hypothesis testing from the 4 research variables, including emotional intelligence, spiritual intelligence, ethical organization culture, and then ethical behavior. So at just R square is 0.193. Okay, discussion. Okay, the discussion, the partial test result show, but based on the data analysis that has been done, it can be concluded that the emotional intelligence variable affect student ethical behavior. And then the partial test, the hypothesis 2 state that spiritual intelligence has a positive and significant effect of the ethical behavior of student. And discussion for loss, the partial test result, this means that the variable organizational ethical culture in Indonesian Budaya Organisasi has no effect to ethical behavior of student because the variable organizational lecture have a value, sig value of 0.719. And conclusion, the results show that emotional intelligence had a positive effect on student ethical behavior. Spiritual intelligence had a positive effect on student ethical behavior. And the organizational ethical culture had a positive effect on student ethical behavior. So it can be concluded that the increasing emotional intelligence and spiritual intelligence, it will have impact on increasing the ethical behavior on undergraduate student in private university, Terghout Bandung. Okay, thank you, Finis, for my presentation. I beg your pardon. Thank you for your great attention. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Please give warm applause. Well, thank you very much for an interesting presentation by Mr. Romi. And the conclusion of the presentation are, the first one is about emotional intelligence exert a significant and positive influence. That is, on the ethical behavior of management students. And the second is about spiritual intelligence exerts significant and positive influence on student management. And the third is the ethical culture of the organization has no effect on the ethical behavior of management students at private universities in Bandung. Well, for the next presentation will be delivered by Ferbi Wijaya Kusuma. Please welcome. I'm so sorry, this is time for you to present your paper. Ferbi?
Okay.
You ready?
Check.
Yes, okay. Its
Okay.
time is yours.
Check.
Well, ladies and gentlemen, Ferbi will present about the research with the title is The Influence of the Past Performance Fund Size, Inflation and Interest Rate Toward Fixed Income Mutual Funds Performance in Indonesia on 2014 to 2018. Yes, please.
Okay, thank you Mrs. Yulianti as a moderator. Assalamualaikum warahmatullahi wabarakatuh. Good morning, ladies and gentlemen. Let me introduce myself. My name is Ferbi Wijaya Kusumawati, and I'm from Faculty of Economics and Business, University of Jenderal Ahmad Yani. First of all, I'd like to say thanks for this opportunity to present our papers with the topics of analysis of factors that affecting the performance of fixed income mutual funds in Indonesia. Study on fixed income mutual funds registered on Otoritas Jasa Keuangan for the period from 2014 to 2018. Introduction. The issue of an economic recession is being discussed. Several countries have experienced a recession where the GDPs of the country has experienced negative growth. However, in this uncertainty economics, Indonesia can be said have a fairly good and stable economic condition in recent years, as evidenced by the achievement of economic growth of 5.1 and 7% in 2018, and this trend of economic growth above 5% are going to be continued. One of the factors that can increase economic growth is infrastructure development, and limited funding is the main problem to carrying out these programs. Therefore, the government and stakeholders often work together in issuing policies to explore potential funding by facilitating the license or encouraging the use of capital market instruments for infrastructure financing. Capital market has an important role in the economic of a country because the capital market carries out two functions as a financing for business and as investment in long-term financial instrument. Investment can be defined as a commitment to invest several funds today to obtain profits in the futures. The theory of modern investment is minimizing risk and increasing returns by diversifying investment. And mutual fund is one of the investment instrument that using this theory. Mutual funds is a company that pulls money from a group of people with investment goals to buy securities in money or in equity market instruments. Investors need to choose mutual funds according to their ability and investment objectives to choose the best mutual funds from the many mutual funds options available. The choice of mutual funds can be done by knowing by performance of the mutual funds they choose to invest in to obtain optimal returns. That is why investors need to know the performance of their mutual funds so they will not losing their investment. Literature review. Mutual fund performance. Mutual fund performance reflects the ability of a mutual fund product to generate returns. Therefore, the performance of mutual fund is determined by the amount of its returns. mutual fund performance is influenced by various factors that determine whether a mutual fund is performed well or badly. Past performance. Bill Gates in 2011 in his research emphasized that past performance is positively related to future performance, which means that past performance contains information about future performance. Fund size. According to Sukmanirum and Mahfud in 2016, a larger size of mutual funds allows mutual funds to diversify their assets so large size of mutual funds can provide good performance for mutual funds. Inflation. Inflation can increase the company's income and costs. If the increase of production cost is higher than the increase on the price that can be enjoyed by the company, then the company's profitability will decrease, which will affect the company's stock price and impact the performance of mutual funds. Interest rates. When interest rates are increased, people tend to choose an alternative instrument that provide higher interest rates. As a result, stocks and bonds are sold by the investors, which causes the falling of price of stocks, bonds, or mutual funds. Research methods. In this research, researchers using a quantitative approach with 218 fixed income mutual funds as a population and using purposive sampling and obtain 95 fixed income mutual funds that keep operating from 2014 to 2018. To test the hypothesis, researchers using pool data regression analysis. And before that, we are running some tests like Chow test, Hausman test, and Lagrange multiplier test. Result and discussions. The effect of past performance to mutual funds present performance. The result of this study are following the research hypothesis, which states that past performance of mutual funds has a positive effect on current mutual funds performance. The effect of fund size toward funds performance. The result of this study are not following the hypothesis proposed by the researchers. In addition, smaller fund size tend to be able to manage their liquidity better, such as when the larger fund size experience larger scale withdrawals by their investors. The mutual funds tend to experience a liquidity difficulties, which will decrease the return and will impact on its performance. The effect of inflation to funds performance. The result of this study are following the research hypothesis, which states that inflation has a negative effect on mutual fund performance. The effect of interest rates to mutual funds performance. The result of this study are not following the research hypothesis. From the research result, there is no empirical evidence that the higher the interest rate, the lower the performance level of the fixed income mutual funds. This shows that in the research period, interest rates do not directly influence investor decisions to invest. Conclusion. The result of the research, partially, past performance has a positive effect towards present performance, and fund size has no effect, inflation has a negative effect, and interest rate has a positive effect. And simultaneously, all the independent variables have an effect towards the performance of fixed income mutual funds. And the next is suggestions. The researchers have three suggestions for further researchers. First, maybe future researchers can add another independent variables. Is it macro or macro? And second is using any other performance index like Janssen and add observation periods so their research can be really up to date. For investors, the result of this study can be a material for consideration that will make investors more sensitive to economic change around them. And for investment manager, the result of this study make investment managers evaluate their performance in the previous period so they will have a better performance in the next periods. And I think that's all from my presentation. Thank you so much for your attention, and I'm sorry if there's so many mistakes that I made. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Well, give warm applause for Ferbi. Thank you, Ms. Ferbi, for the interesting presentation, and the conclusion of the research is the result of this research shows that partially past performance and interest rate have a significantly positive influence, and inflation have a significantly negative influence. Well, for the next presentation will be delivered by Mrs. Dwi Indah Lestari, with the title is Burgernomics. Wow, it's so very interesting. Yes, Burgernomics. What can your burger tells you about? Mrs. Dwi Indah Lestari, the time is yours.
Okay. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Okay, thank you for the opportunity. Before I start, let me introduce myself. My name is Dwi Indah Lestari from Faculty of Economic and Business, Universitas Jenderal Ahmad Yani. Today I would like to present one of my paper that called Burgernomics. I hope that this presentation will not make you feel hungry. Okay. Okay, Burgernomics is it's coming from two words, burger and economics. So this is introduced by the economists in 1986. So this index was aimed to test the theory of purchasing power parity and determine the disparity in currency values all over the world by using Big Mac. So the question is, why Big Mac? Why not another product or another service? So the reason why the economists using Big Mac is because in most of countries it was easy to find Big Mac. So if you go abroad, it is very easy to find Big Mac in all over the world. So the ingredients to make a burger is all relatively the same. So that's why the economists using Big Mac rather than other product. Okay. However, many scientists using another index, for example, the Starbucks index. Again, the reason is the same. It's because it is easy to find Starbucks almost all over the world. So they are using latte grande size, and they're making parity in the price of one latte. The website called Finder created the Starbucks index in 2019, and it compared the difference in price for the same cup of coffee in 76 countries around the world. So here, if you can see, it is very cheap to get one latte in Turkey, but it is very expensive to get a latte in Denmark. For example, if you go to Denmark and you would like to buy a coffee, you need to spend like $6.5 to get one cup of coffee. But if you go to Turkey and you would like to have the same latte, and you go to Starbucks, you can spend like $1.78. So for the same latte, you spend there is a huge difference for one latte comparing from Denmark to Turkey. For another index that are using by a researcher is an iPhone index. So if you are in Brazil, you need to take your pockets more than if you are in the US. So for example, an iPhone in the US, you spend like 1,251 to get an iPhone. But if you are in the Brazil, you need to get 2,050. It's almost double the price. So what does this index means? So it means that the purchase power parity believe that we need to spend the same amount all over the world for the same product and services. However, the index show us that in some countries, some product or services is more expensive than another countries. Okay, let's go back to Burgernomics. I said before, price of the Big Mac all over the world is supposed to be the same. How does it, how the mechanism is, we are converted the price to USD because the USD is the best currency. So some Big Macs are more expensive and others are a lot cheaper. So what does it mean? It means that it can be indicated that some currencies against USD are overvalued while the rest are undervalued. Okay, I will show you how it works. For example, if you are in the USA and you would like to have one Big Mac, you need to spend $5.58. But if you are in the UK, you need 3.90 pounds. But we cannot compare it because it has different currency. So how does it compare? We need to convert it from pound sterling to USD. So here we can see that the price in the USA is USD 5.58, and the price in the UK, if it's converted, the actual exchange rate, the implied exchange rate is 0.57. However, by the data in 2019, the actual exchange rate is 0.78. It means that pound sterling compared to USD is undervalued. Okay, so why does it happen? It happened because of the macroeconomy. Some countries are undervalued and the other are overvalued. Let's see for the example here. We can see the Switzerland. The implied dollar valuation is 80.7. It means it's overvalued. Why does it happen? Okay, in Switzerland, we know that Europe has debt crisis in several past years, and then most of Eurozone members like Greece, Spain, Portuguese are unable to repair their debt. So the investors are trying to find safe countries to invest, which is Switzerland. That's why, because most of investor goes to Switzerland, it creates the Swiss franc is a lot expensive than it should be. Okay. While in China, if you can see here, the implied dollar valuation is in minus 45.3. It means that China yuan is undervalued. Why does it happen? Okay, so as we know, it is easily for us to find China product. Yeah, it's because one of their strategy is export their goods and their product, or maybe their service now, abroad. Why does it happen? Because when it's depleting due to the, because when the Chinese yuan is depleting, it means they will get benefit when they export their goods. Okay, while Russia, if you can see here, this is one of the most depleting currency in the world. If you can see here, the implied dollar valuation is minus 70.4. Why does it happen? It happened because the economic sanction from the US, as we all know, the US and Russia is not has a good relation. So the economic sanction from the US and the depleting oil prices are the reason why Russia is really depleted. Okay, and we are moving to Southeast Asia. Southeast Asia, most of these countries are undervalued. Malaysia in Indonesia is Asia's worst performing in exchange rate. If you can see here, Malaysia are worse than Indonesia, but the difference is not really big. If you can see here, Malaysia is minus 60.6, while Indonesia is minus 58. Why does it happen? Because Malaysia and Indonesia are emerging countries. As we all know, emerging countries is very risky, and then we have lower interest rate rather than another countries that already developed. That's why most overseas funds are moving from the from the emerging countries to the less risky countries or developed countries such as Australia or most of the European country. So what can we get? What can we know from the Burgernomics? I know that the Burgernomics cannot be, it's not precise. However, it gives a big picture about our currency. Is it under or overvalue? From here, we can see that if it's overvalue, it means that the currency is expensive, so that export is also expensive. So if you can see, in Switzerland, the goods from Switzerland is not really common to use by us because it's pretty expensive to get imported goods from Switzerland. It's because the currency is expensive. So the price, if it's imported, the goods here, the price will be too expensive. So what can they do? They can take benefit from importing cheap raw material to reduce the cost. And the government may decrease or eliminate tax on export activity to boost export. While Indonesia is under category undervalue, while the currency cheap, and as a result, export is also cheap. This is the huge opportunity for us because we have opportunity to boosting export and lowering interest rate. It may boosting company so that they can expand their business around the world. Okay, that's all. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, thank you for the interesting presentation about Burgernomics. So interesting, yes? Burgernomics can be used to give a big picture whether a currency of one nation is weak or strong, so that the government can identify the exchange rate discrepancies and use this information as a guidance to decide their fiscal policy. Well, thank you, Mrs. Dwi, for the presentation, and the next presentation will be delivered by Rizka Melissa. Well, Ms. Rizka Melissa will present about do good corporate governance and profitability affect companies and submitted the annual financial report on time? Okay. That is the title of the paper.
Okay, tes.
Okay. This is time.
Assalamualaikum warahmatullahi wabarakatuh. Good morning, ladies and gentlemen. First of all, let me introduce myself. My name is Rizka Melissa from the Economy and Business Faculty of Universitas Jenderal Ahmad Yani. Today, I will present my research, the result of my research with the title of Do Good Corporate Governance and Profitability Affect Companies on Submitting the Annual Financial Report on Time. The first thing that I want to explain is the introduction of my research. In order to add their, in order to have additional capital and raise the company value, companies will be a go public company. They will be a listed company on Indonesia Stock Exchange. But as a listed company, companies have to report their annual financial report to the Indonesia Stock Exchange. Because the user of the information will use all the information from the report as the basis of decision making. But in the reality, there are a lot of companies that still not submit their annual report on time. For example, according to exchange announcement number PENG LK BEI.pp1.pp2.pp3/102020, there are 10 companies that have not presented their third quarter financial statements. So, what are the factors that affect the financial statements timelines? For my research, I tend to give some factors which are corporate governance mechanism and profitability. In corporate governance mechanism, there are 4 items which are audit committee, independent commissioner, managerial ownership, and institutional ownership. So the audit committee in a company should be led by a independent commissioner, because there is no bias of the members to the stakeholders, to the managers like directors or commissioners, so they can do their job without bias and independently. Audit committee, the role is to improve the quality of financial statements, decrease the lateness of financial statement submission. Meanwhile, the independent commissioners, like I said before, independent commissioner should have no relation with the stakeholders, with the commissioners and the board of directors. Managerial ownership is a percentage of share owned by the managers of the company, such as directors and commissioners. Meanwhile, the institutional ownership is the percentage of shares that owned by the institutional investor. The next is the profitability. Profitability is the measurement of the success rate company to achieve their profit. So in this research, the profitability is measured by the return on asset, or ROA, that divide the earn after tax to total assets. So if the higher percentage of the ROA, it means that the company able to achieve their profit well. Next is the research method of this of my research. The research used quantitative research, and the analysis technique is logistic regression. The population is the meaning sector companies listed in Indonesia Stock Exchange, and the sample using purposive sampling method with the criteria of the meaning sector companies listed in Indonesia Stock Exchange for the year of 2014 to 2018, and the companies must be published annual financial statements. So the result of this sample is I obtained 190 samples from 38 companies. Next, the hypothesis of this research is H0 that implement the independent variables of this research do not affect the dependent variable, and the H alternative, or HA, implement the independent variables affect the dependent variables. So this is the result of my research. The first test that I have done is the overall model fit that show the value of -2 log likelihood from the block number 0 and block number 1. The block number 0, I got the value of 233.749. Meanwhile, the block number 1, I get the value of 215.051. Here we can see that there is a decrease from the block number 0 to the block number 1. That means that the model fit the data. The second one is determination coefficient, that we see the result from the value of Nagelkar R square, that here we got the value of 0.198. It means that 19.8% of the independent variables in this research able to describe the variation of dependent variables, and the rest of it can be described by another independent variables outside the research. The third one is the Hosmer and Lemshow test. We can see the result here by the significant value of 0.523, which is lower than 0.005. This means that the logistic regression of this research fit the data, and there is no significant difference with the observation value. The last test is the regression coefficient test, or WALT test. Here we can see the the significant value of each independent variables. The first one is audit committee. We got a value of 0.038, which is lower than 0.005. It means that the audit committee has audit committee affect positively and significantly to the timelines of financial statements. The next one is the independent commissioner. We got the value of 0.505, which is higher than 0.005. It means that the independent value has no effect to the timelines of financial statements. Next is the management ownership. We got the value of 0.590, which is higher than 0.005. It means that the managerial ownership has no effect to the timelines of annual financial statements. The next one is the institutional ownership. We got the value of 0.733, which is higher than 0.005. Also means that there is no affection by the institutional ownership to the timelines of financial statements. And the last one is for the profitability. We got a value of 0.00, which is obviously lower than 0.005. That means that the profitability positively and significantly affect the timelines of financial statements. So we get the conclusion here that from the variables, there are two variables that positively and significantly affect the annual financial statement submission, which are audit committee and profitability. And there are three variables that not affect annual financial statement submission, which are independent commissioner, managerial ownership, and institutional ownership. It means that the higher amount of audit committee and the higher percentage of the return on asset of the profitability can affect the financial statements. The higher the amount of audit committee can be make the company submit their financial statement faster. Also, if the company has higher profitability, it means that company should have report their financial statement faster. Also, for the independent commissioner, managerial ownership, and institutional ownership, according to their amount of members or the percentage, there will be no affection to the financial statement submission. I think that's all my presentation for today. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Ms. Rizka, for the good presentation about profitability affect companies and submitted the annual financial report on time. The results show that the partial audit committee and profitability have a positive impact on the financial statement submission timelines. Meanwhile, independent commissioner, managerial ownership, and institutional ownership don't affect the timelines of financial statement submission. Well, for the next presentation will be delivered by Mr. Yun Yun. Mr. Yun Yun will be present the research with the title is Supply Chain Coordination and Integration on Supply Chain Performance in Food Business, right?
All right.
Okay. Well, Mr. Yun Yun, this is your time.
Okay, thank you, Mr. Moderator, Bu Eka Yulianti, was give me opportunity to explain my article. It's literature review about supply chain coordination and integration on supply chain performance in food business. Before I start my presentation, let me introduction myself. My name is Yun Yun. I as a first author in this paper. The second author is Mr. Asep Kurniawan, and third author is Muhammad Franz Romi. Is very much Muhammad Franz Romi. Okay, in this analysis or this article, I try to analyze about business organizations strive to gain a competitive advantage in the market. Currently, competition is not only competing between one company, but also competing between supply chain networks. So many organizations make a combination with supplier, manufacturer, or distributor, so that the successful marketing of product must be supported by supply chain network, ranging from supplier to distributor, who deliver product to customer. An important dimension in the supply chain relates to how a business organization build partnership through supply chain coordination and integration. By coordination, the supply chain performance can be improved. So it's like you between many people make an organization, but many people and organization have make improve personally gitu. But conflict in supply chain network often occur where the traditional manufacturer and retail are involved in vertical and horizontal competition. Vertical competition occur when a factory sells to wholesaler at above the marginal cost. So retailers sell for much more. Meanwhile, horizontal competition occur when manufacturer and retail sell substitute product, so that there is a dual channel in the supply chain. Supply chain coordination can be achieved by contracting to create optimal decision from a centralized supply